Welcome to In-Depth for a closer look at what is making mining headlines in the Americas. China has announced its latest export quotas for rare earth elements, the critical metals of which it accounts for over 95% of world supply. Many of these elements are in a supply shortage and are necessary to make products such as wind turbines, smartphones, and hybrid and electric vehicles. Mining Weekly's deputy editor for North America, Matthew Hill, who is based in Toronto, Canada, joins me to discuss the issue. Firstly, Matthew, what were the export quotas announced recently, and why do they matter?
Well, this month the Chinese Ministry of Commerce, or MOFCOM, announced the quotas for the second half of this year. They showed a doubling of quotas compared to the second half of last year, when there was a dramatic cut. But really everyone looks at the full year totals, and if you add the second half of this year to the first half, you come to 30,246 tons, which is basically the same amount as the total for last year. As you say, these metals are critical to make things like wind turbines, hybrid vehicles, and even go into smartphones and laptops. So for the modern world, everyone needs them, and there has been an increasing shortage of them because China's been, they say they've been trying to take measures to protect their environment and reduce pollution, and also protect what is ultimately a finite resource. They've got about a third of the world's rare earth reserves, but they produce currently around 97% of the world's output. Now the cuts in export quotas and production have led to a global shortage of many of these elements, and that's led to a lot of price spikes, and many companies have complained that they struggle to even get their hands on the materials. There was a major issue with Japan last year, where shortly after a territorial dispute, it emerged that China had curbed exports to Japan. Eventually it got sorted out, but it just showed the sensitivities that go along with the whole world relying on one country for 97% of suppliers of something that is so important to the world's modern economy.
Would you say that the quota levels were in line with expectations?
Yeah, I think if anything, analysts and companies in the sector were expecting another cut, and the fact that the totals are more or less in line with last year's totals maybe did surprise people to the upside a little bit, but I think it's more or less in line with expectations. But where demand is still increasing and the export quotas are kept at the same level as last year, this isn't going to do anything to help the global shortage. And
what prospects are there for non-Chinese suppliers coming into production to lessen reliance on China?
Well, there certainly are many. There's a whole plethora of juniors who have announced plans to develop rare earth projects. The most advanced that the world outside China has at the moment is Molycorp, which is developing the Mountain Pass rare earths mine in California. Actually, it's an old mine that was closed down in the early 2000s, and they're reopening it and expanding it, modernizing the plant, etc. They're supposed to start producing around the end of 2012, 2013. Then you also have Australia's Lynas Corp, which is also building a rare earths mine in Australia, and they are developing a rare earth oxide separation plant in Malaysia. Then you got a couple of companies that are also fairly well advanced, building mines in South Africa. There you got names like Frontier Rare Earths and Great Western Minerals, and then really a whole slew of companies that are quite a bit further down the development curve.
We have seen some merger and acquisition activity in the rare earth sector over the past few months. Will this trend continue?
Yeah, Molycorp particularly has been relatively active on the merger and acquisitions front. They bought a plant in Estonia. They also bought another rare earth manufacturing plant in the US. We haven't seen an awful lot of M&A on the actual rare earth mining side, but given the fact that analysts at Goldman Sachs earlier this year predicted that there might even be a supply glut, particularly for the light rare earths, which make up the bulk of Molycorp and Linus's planned production. Analysts are thinking that these companies might be keen on getting their hands on supplies of heavy rare earths, and I think it's not unexpected that some of the better quality heavy rare earths juniors will get snapped up by the bigger companies like Linus and Molycorp in the future.
Thank you, Matthew, for joining me. That is the show for today. Join us again next week for more news and insight on mining in the Americas. I'm Martin Joaquinho for Creamer Media in Johannesburg.